Hey everybody, it's Pete Renzulli. Welcome to Stock Trading Pro. Today we have a ton of stuff going on today. The stock market got smacked on Friday last week, so of course you would expect the market to be down today. But no, the market is up huge this morning again, flying in the face of what everybody would expect this morning. So today's theme, we're going to keep it simple: profits, panic, and predictions for the remainder of 2022 in the stock market. Is the stock market crash over for 2022? Was the big giant volume day from last Thursday what is known as an accumulation day? We're going to talk about that. We're going to break down accumulation as it's outlined in this book. Plus, I'm going to show you how we do it in our order flow masterclass over a little bit longer period of time. We're going to talk about some of the best stocks to pick this week, some of the best stocks to buy this week, as well as short sales. Tesla stock right at the bottom of that trading range right now and has a Grand Canyon of room to the downside if it breaks down below that level. Bank of America just reported. We're going to talk about that as well. We're going to talk about two groups of stocks, not big sectors, two groups of stocks that I like right now, whether or not the electric vehicle stocks are a bargain, as some of them are actually below $10 right now. XPEV, I think last time I looked, was around $9. Goldman Sachs earnings come out tomorrow. We have a ton of stuff to talk about, but I think the single biggest thing that we're going to talk about today in the current market environment for 2022 is which type of stock trader has made the most money in 2022. And it is clear trend traders are getting their head beat in with these short, vicious rallies against the big picture. Tape readers are dominating this year, and we're going to talk about what it means to be a tape reader, and that is focusing on the most immediate price action. And that doesn't matter if you're a day trader or a swing trader. We are going to set up the week. There is a ton of stuff to look at in the stock market this week, especially with the earnings season kicking off. My gosh, I'm actually excited for today because there's so much. We're actually going to do a lesson today. We're actually going to go into PowerPoint, and I can't wait to show you that today as well. So stick around. We could be back in just 1 second. Okay. There's a lot going on. So I want to make sure I say hello to a couple people. John Oakes, good morning. How's it going, pal? John Bates, good morning. Good morning. Eduardo, how's it going? Eduardo, good morning. How's it going? Let's see, Mark, comment on STNG. Okay, we'll take a look at that in just a minute. What we're going to focus on, though, first is we're going to hop on over here. This is the big thing that we're going to take a look at, and specifically down here, right? Stock market 2022, predictions, profits, and panic. And then we're going to do a little bit of a deep dive into this. We're actually going to break down accumulation and how accumulation is built into the market. Do we think we're going to get a big V-shaped bottom like we've got when the pandemic started and a couple of other opportunities like that? No way in the world are we going to have a V-shaped bottom. Inflation is through the roof right now. Any other opportunities that we've had like this, it has not been inflation and interest rates the way they are. The stock market was in bullish markets when we got that kind of a move to the downside. We are not going to get a V-shaped bottom. Let's be super clear about that. If I'm going to put a prediction out there on the stock market, no way in the world are we going to go like this and then go straight back up and just start heading towards all-time highs again. What we are going to do, very, very likely, towards the end, let's say Q3 of 2022, where do I think we are going to end up at the end of 2022? So right now, let's actually head on over to the charts. We're going to go on over to the market. So let's actually hop on over there. Let me pull those charts up and take a look at where we are right now. First of all, in the futures, you can see where we are right now, up 42 points. And that's where we should have been, right? No, not even close with the way the market closed on Friday. We had this big accumulation day on Thursday. Market rallied up, closed on the lows. Looked like everything was falling out of bed on Friday. So raise your hand if you left Friday afternoon saying, this is panic mode. The market's going to go down again. We're crashing. That was a one-day thing. Wrong. We're in Game of Thrones scenario right now at the market where you need to learn to read the tape. So we're going to focus a little bit, and I promise we're going to get to sectors. We're going to break down individual stock picks. We're going to take a look at STNG that was posted in there by Mark before. I appreciate that, Mark. If anybody has any other ideas towards the end, we can take a look at those as well. So here's the big thing, and I've spent a lot of time talking about this with our community right now, specifically members in our Order Flow Pro community, which is keeping your head on straight right now. The market is anything but easy right now. But, and I want to get this across, you have to pick what kind of trader you are right now. Are you investing? Are you trend trading, or are you reading the tape? And right now, tape readers are winning the battle. And tape readers are mostly focused on a significant reference point, which could be your entry price. It could be last week's high. It could be last week's low. It doesn't make a difference. But you are reading that most immediate price action. We get a lot of questions right now about how are you making money in this market where every day it seems to be going in different directions. I can't express this strongly enough. This is the mindset and the game plan. You have to map this out the same way that everybody does who takes this job seriously. You have to say, this is what I expect to have happen. If it does, I'll trade aggressively because I'm confident that I built a good game plan. However, if what you game plan does not unfold, you have to do one of two things. You have to really level up and understand how to read the tape, which is that most immediate price action. But most importantly, and I can't say this strongly enough, if what you expect to have happen in the stock market does not happen or is not happening, it is critical that you stay in cash or lower your exposure. Again, everything we're talking about here is for educational purposes. I'm telling you how I do things. When the market does not match my strategy, when the market does not match my edge, you have to fight the urge to do something. You have to stay in cash, reduce your positions, or really, if you're going to start getting into positions, is start to work those positions in pieces. It's the smart thing to do. So what's going on right now? Well, we got a lot of big news coming out right now. Bank of America actually just reported to start the week out. You can see it's actually up 3%. Let's actually talk about some of the bigger news coming out this week. So here's Bank of America, higher than expected bond trading. Okay, it doesn't matter the reason. Same thing last week with JP Morgan and those guys, right? Now, as the week is unfolding, we have 60 more big companies reporting, okay? But I think the biggest ones right now, Tesla, which we just talked about, we're going to take a look at the charts. Goldman Sachs breaking up their company into multiple divisions. Goldman Sachs actually earnings coming out scheduled for before the market open tomorrow. So let's map this out and put this all in the context of the way the market closed on Friday. There was not any green on the market on Friday. So I can't stress this enough. If you're like me, you don't like to have a lot of risk. You like to keep your risk down. You like to just, kind of get in there and mix it up when it's obvious. Right now, for me personally, especially in October of 2022, I have dramatically reduced my position size, and I've mostly been trading for cash flow, which means there are more in the moment type trades over, let's say, 1 to 3 days, or if you're day trading stocks over an hour, maybe, and booking that cash flow and going to the next trade. We are not in a market right now, and today is proving it, to hold a little bit longer term, unless you are looking more at monthly charts where you're talking about where it might be, let's say, at the end of the year. So I just want to give you some of my experience right now. I have dramatically reduced my position size, except for certain pockets of opportunity where we recognize the market and the market internals. And when I'm talking about the market internals, I'm talking about the advanced decline line. I'm talking about the VIX. I'm talking about the New York Stock Exchange tick indicator. And I'm talking about sector rotation. Only when those are perfectly lined up am I increasing my size a little bit. For the most part, I'm trading for cash flow. So I've reduced my exposure to the market because I'm telling you right now, this market is wacky and it is driving a lot of smart people crazy. But you have to learn from that and you have to take the right action. I can't stress this strongly enough. Again, if you don't know my background, I own 2 trading firms in New York City. And what I'm walking you through right now is exactly what I walk through for new traders on my floor in New York City. When the market does not match exactly what you want it to do, you have to be in PPC mode, which is preserve precious capital. The market is playing Game of Thrones right now, and it is driving a lot of people batty. Just when you thought something was going to happen the way you thought it would, the dragon comes in and takes everybody out on the left side. Preserve your capital until it becomes a little bit more obvious, which moving that over a little bit. And again, if you have a full-time job or maybe you don't think you have enough time, it's very easy to pay attention to what's going on in the market if you don't have a lot of time by looking at the weekly chart. So I want to get this across to everybody, and then we're going to break down accumulation. We're going to talk about the books. So if you happen to be looking at the market and trying to figure it out, do not look at the daily charts, especially if you are busy. You should be looking at the weekly charts and you should be looking at the monthly charts. If you're looking at the daily charts right now, it's back and forth too much, and you're probably losing confidence because every day it's changing. But if you go out to those little bit higher time frames that you can focus on, even if you have a full-time job, it's easier to read the market if you are super busy on the weekly charts and higher. The daily charts are exciting, but there's too much back and forth right now. You mostly should be focused on, from one Monday to the next Monday, not from Monday to Tuesday. It's just back and forth too much right now. And if you're not in the markets every day, it's probably confusing you. So focus on those weekly charts. If you are working a full-time job, maybe running a business, it's just the right way to look at the market right now. And it'll also help you keep your sanity. Okay. So we want to break it down a little bit further. We want to get into accumulation and distribution. Specifically, a lot of people reaching out and asking questions about last Thursday's price action, where the market was up huge, volume was up huge, and everybody asking, was that the bottom of the market? Now, William O'Neill talks about accumulation distribution. We put that in the video. And then I'm going to show you how I do it. First, we're going to go over to the PowerPoint, and then we're going to get into stocks. Okay. So when we talk about accumulation distribution, this is really the first part that we're talking about. Okay. So this is all coming in the form of technical analysis and reading the tape. So the big part that we want to get across here, okay, accumulation is where institutions and hedge funds are buying shares as quietly as possible as price moves lower. Now, this is the big part here. Accumulation happens when stocks are going down. Okay, they're going down. You can think about selling, selling, selling. And then somebody steps in and says, this is a value area where I think that price right now is a good deal for the future cash flow. So they're buying now for the future cash flows of those companies. So what the majority of people, the retail public, or everybody's panicking, market's going down, and now somebody's in there. Let's use James as an example. Let's say James owns a hedge fund and it's going down. He's like, my analysts love it at this price, AMD or whatever stock it happens to be. As it's going down, they're buying it. So there's still more selling, they're buying it. There's still more selling, they're buying it. But then at some point, the selling dries up a little bit, but they still need more shares. And that's when you get these one big spiky days. Again, I'm going to put it on the screen here just so you can get an idea of what I'm talking about. And let me add volume here into the chart, which was what happened in the SPY last week, right here. And you can see this massive reversal. So we got two different, I'm actually going to come back on the screen. There's two different things to pay attention to here. One is about a week before that, when the market broke down, should have went down on heavy volume, and it didn't. And we talked about that. You can go back to the video. And then last Thursday, where massive bad news came out on the CPI number, buyers stepped back in, pushed it back up. Now, a lot of people were talking about, and well, I want to point out and let you super clear what we're talking about. We're talking about right here, where heavy volume breakdown, the market should have went down, and it didn't. Then we had bad CPI numbers here. The market should have went down. It didn't. As a matter of fact, we reversed completely in the other direction. So we want to tie that back into what we're talking about here with accumulation. This will be buying, ending a downtrend, leading to a consolidation or a pullback. So this is really what we're talking about right now, okay? Beginning to accumulate a position. We get a lot of questions about what accumulation means. And in case you don't know, I had 25 former New York Stock Exchange specialists on my trading floor in New York City, and they walked us through all of this: accumulation, distribution, markup, and markdown, how institutions work positions, which, by the way, that's something very smart that we should learn to do as well. Institutions don't just go in there and start buying 5 million shares and they're done. They work positions over days, weeks, and months. So if you happen to be a short-term trader, well, quite frankly, even if you're investing, the smart way is to mimic what the institutions are doing and get a little piece and then work the order. Get a little piece and work the order. It's more important to get the full position than it is to get the exact price if you feel like you have a good handle on the next move. So that's a very important thing. But the part that I want to get across here that's super important is they're beginning to accumulate a position. They're not doing it all in one spot. So how does that translate into last week? So beginning to accumulate a position, which is what we saw in those two different charts on here. Remember, what should happen and doesn't happen. This should have broke down, it didn't. This should have went down and didn't. And not only did they not go down, they reversed on heavy volume. So here's the big thing I want to get across to everybody as well. Again, if you happen to have a full-time job and you want to be involved in the markets, but you need some sort of structure, you want to just get a handle on which stocks have smart money attention, run a scan in whatever software you use for double normal volume from the previous day. Now, we normally use an average volume of the last 30 days, and then we run scans for which stocks did double that normal volume. And I could actually show you some of the ideas from last night. So just to give you an idea, let me actually pull that up over here. And when you can see when we actually run our scans, these are the stocks that had double normal volume on Friday. So Kroger's, obviously there's some news out of Kroger's. JP Morgan had earnings, and UNH also had earnings. So what are we looking for? Let's go back to what we just talked about on the PowerPoint. We're looking for increase in volume and then what that volume means. So they're starting to accumulate a position. So accumulation in action, large order to fill. They'll try to do it as quietly as possible. Now, what would be the reason that they couldn't do it quietly? It's because more money, the selling dried up. They had to step up. The reason for wanting to do it quietly is simple: is if they tip their hand on themselves, the order will push the price up, and that's what's going on. Now, here's the big thing we're looking at. Can be seen on a chart as a pause in the trend. So we are not seeing a pause in the market yet. All we saw was 1 day. So let's be super clear about that. If we zoom this out a little bit, what we are looking for is sideways price action that goes on for a while. And this is not sideways price action. It's still a little bit more volatile. So I want to give you the roadmap right now of what we're looking for a potential bottom in the stock market. There's been a lot of panic, but the potential bottom that we would be looking for is a trading range or a channel with heavy volume during that trading range, but very little price action. That is called accumulation. So I just want to say that one more time. Heavy volume pause during a small trading range where it's going up and down, but it's not moving that much. That's the definition of accumulation for those of you that understand tape reading. So tying that back to this book is William O'Neill takes it a little bit more detail where he says during that accumulation that he's looking for anywhere from 5 to 7 accumulation days during that pause. So let's just really bring this back so it's super easy for you to understand and spot. What we are looking for a potential reversal in the market is a trading range on heavy volume. And then during that trading range, which should last anywhere from 20 to 30 days, let's be super clear about that, 5 to 7 days that look like this. 5 to 7 days that have this kind of heavy volume. Now, I'm going to put myself out there. I'm going to predict what I think is going to happen for the remainder of this year. And I know that's not what we normally do. Normally, we focus on probabilities, not predicting, but we have to put some kind of roadmap together of what we're looking for. So we just outlined what accumulation looks like. Now, the way the market's unfolding is we are likely to get a short-term rally in stocks right now, simply based on lowered earnings expectation and stocks beating those lowered expectations. So whether you call it a short covering rally or whatever you want to call it, all of the expectations with the CPI number, inflation, the housing market, all the stuff that's going on right now has the market, and probably every YouTube video you watch right now talking about the stock market crash and that there's really no best stocks to buy now, right? That's not true. You need to read the tape. And again, if this happens, then I plan to do this, right? If what I'm looking for does not happen, then we have to drill down a little bit and say, all right, it's not doing what I want. I'm either going to be in cash until it does what I want to do, or if I have a little bit more time, then I could focus on the shorter time frame. So again, most people work full-time jobs and they do what's called swing trading or position trading, where they're not looking day by day or hour by hour. You're looking at a couple of months or a little bit longer than that, maybe even from one earnings report to the next, right? So here's the prediction that I have for this week and this year. I think this week we have a lot of companies reporting, a lot of big companies reporting. And again, it's Monday, so we like to get, game plan the entire week. I'm looking for lowered earnings expectations to be beat this week, see a short-term rally this week that will then lead to the market earnings season unwinding, and we start to push down again. So again, earnings season is just kicking off. I want to be clear about that, but we're talking financial stocks earnings this week. Large cap tech, not so much this week. We have Tesla this week. We have IBM this week and a few stocks like that. But what we're seeing right now is lowered guidance. I'm expecting a little bit of a rally this week. Now, here's the end of the year type of thing. And this is how we're tying it back into accumulation. I'm looking for a short-term rally, lowered expectations, then the market pushing down towards the end of the year. I know nobody wants to hear that, but the big picture is still pointing down. Then towards the end of the year, that accumulation that we just taught you. So this week, short-term rally, bigger picture for the year. We're going to get what's known as capitulation to the downside, which is where panic starts to set in a little bit. And I know nobody wants to hear that, but we're planning this out. Remember what we just said. If the market's not doing what you expect, lower your position size or get back into cash. So we're mapping this out, right? If the market unfolds that way, then we're looking for accumulation. So short-term rally on lowered expectation for earnings. So we're beating lowered expectations. It doesn't matter that they're lowered. We're beating expectations. Then inflation towards the end of the year kicks in a little bit more again. The Fed raises again. We have a flush to the downside. After that flush, again, markets reverse on heavy volume. You need to write that down. Flush to the downside on heavy volume as earnings season winds down. Sideways price action with heavy volume. That accumulation that we just looked at. After accumulation, this is also where you want to run those double normal volume scans, because big spikes to the downside, we call that exhaustion. Some people call it capitulation, whatever you want to call it. There's another type of volume that you need to know, which is called fuel. Fuel is when you have a trading range and then you break out of that trading range on heavy volume. So that, again, if you have a full-time job, this is perfect for you. It's super easy. You can run the scan in 2 seconds. Which stocks are trading double normal volume? That's the scan. But then what are you looking for? You're looking for, are they spiking to the downside with momentum, or is that double normal volume breaking out of a trading range? The second one is the one where big trades happen, because if you went into a trading range and you're breaking out of that trading range on heavy volume, that typically starts a new move. So you want to write that down. Heavy volume typically leads to reversals if it's in a trading range. You want to write that down. Light volume pause, continuation. Heavy volume pause typically leads to a reversal. So that's the prediction for the remainder of this year. A little bit of a rally off of lowered expectations for earnings. Fed raises interest rates again. More CPI data comes out. We probably flush down at the end of the year and then looking for accumulation. That's what I'm predicting for the year. Is that panic? No, it's kind of orderly. We kind of know exactly what's going on. It's just a question of how and when we see that price action. So be patient, okay? So now, as far as heading into today and heading into this week and which ideas we're looking at, we want to break this down and we want to give you some solid ideas heading into the week. So if we map out the way the market traded last week, you can see there's some pockets of opportunity. So we're talking about right now, Bank of America just reported. So we're going to take a look at some of the financial stocks from last week. So again, the big picture is still clearly to the downside. However, again, you dive a little bit deeper and look at the volume off the bottom. So we're actually rallying a little bit here. So I want to be clear, whether it's JP Morgan, Citigroup, Wells Fargo, or now Bank of America, and tomorrow is Goldman Sachs. All of these stocks are in bearish order flow, neutral at best. We are looking for an earnings season catalyst to carry it for at least a week or two. If that happens, I will start to look to build a position in those trades. And I want to be clear, this is not an order flow trade. This is an earnings catalyst off the market being a little bit oversold at this point. So again, we get a lot of comments about, but you're bottom picking. I'm not bottom picking. Go back to what I said before about building a position. Aggressive positions right now for me are short sales in the stocks that are pointing to the downside. If any earnings catalyst sees these stocks rally, because this is the biggest question we're getting right now, is how do I take advantage of these short-term rallies like we had last week? Well, you have to know what time frame you're trading. So again, let's just map this out. If Bank of America holds the bid, if JP Morgan, Citigroup, and Wells Fargo hold the bid. Now, hold the bid means the buyers from last week step back up again. So again, here's the price action we're talking about from last week, and specifically JP Morgan. And if we map this out a little bit stronger here, you can actually see how strong this stock was coming off of earnings. So holding the bid means these buyers step back up and don't let the stock go down. You can see it's actually at 112.40 right now, so a little bit higher than the open. So what is the trade, right? So we're talking about a very short-term trade this week, let's say Monday through Friday, and looking to see if we can start to build a position. If earnings season comes in the way we just talked about, which Bank of America reported today, we'll get some more follow-up from Goldman Sachs tomorrow. I am looking for those stocks to trade outside of Friday's price action. So I'm not doing anything in those stocks until they break Friday's highs, if they do that today. So if we're taking a look at JP Morgan, what we're looking at from last week, and we'll see where it is right now, I need to see it take out 115. So we're still a little bit below that level. Let's go to Citigroup. Same thing. Citigroup all the way up here at 44 and change. And we're down here. Actually, we're right there. So Citigroup might actually trigger early today. So to start out the week with financials reporting, and again, reporting this morning, my initial idea for this week is I'm looking to start building a position. Remember, we just talked about institutions. So let's actually go back to that. I want to make sure it's in the video right here. They are beginning to accumulate a position. So we want to mimic what the smart money does. They're not in there with all their share size, especially on what's perceived market reversals. You go in and you nibble. We call that a P1, which is initial position size. If these financial stocks continue to hold the bid, I'm looking to buy my first piece above Friday's high. Stop loss will be below Friday's low. If it takes off, I'll look for spots to add. If it takes off, pulls back and gets out, I'm out. That's a part of trading. It's an initial stop loss on a lower share size. Now we have a bunch of other ideas that I'm looking for this week on the long side, which is bullish momentum that I'm looking to see turn into bullish order flow. So momentum is the most recent price action. That's what tape readers look at. They're looking at the most recent price action from 1 hour to the next, 1 day to the next, 1 week to the next, and they're just in that mini time frame. Energy stocks, a lot of the energy stocks rallied really hard about, let's say, 7 to 8 days ago, and now they've paused and they've hit resistance. A lot of them traded into a consolidation on Friday. They closed near the lows, but they still paused and they're still near breakout levels. So if the energy stocks rally again this week, I'm looking to be a buyer of energy stocks this week. Now, remember, everything that we're talking about right now, and this is probably the most frustrating part for traders, is you map it out, right? You have everything on your sheet and you write it down. You're like, this is what I think is going to happen, and this is how I'm going to trade this week, right? So you have everything perfectly written down, exactly what you're going to do, and then the market opens and it doesn't do what you thought. And you're like, oh man, I'm wrong, or oh man, the market's frustrating. No, don't think that way. If you have a strategy and over edge, it's proven itself to work, just because 1 or 2 times it doesn't follow through, don't worry about that. Focus on the times it does. So when you put a trade on, if it's doing exactly what you want, your next goal is to learn how to manage winners. If you put a trade on and it doesn't do what you expect it to do, your number one goal is to manage your expenses, right? You take that loss and get out. But the part that messes a lot of people up mentally is when they make a game plan, they say, I really think this is going to happen, and it doesn't. And you're like, oh, I got to go watch 75 more YouTube videos. No, you don't. If it worked in the past, that just happens to be one moment you're not getting follow through. Don't let the one trade that doesn't what you expect to do throw off all the other money that you made. One idea that doesn't follow through does not invalidate all of that other good trading that you did. So keep your head on straight and think long term, not trade by trade. If you're going trade by trade, you're going to drive yourself bananas, and that's not our goal. Our goal is to think long term. Our goal is to think what happens most of the time and what do I definitely plan to do. So if we break this down and we go into the energy stocks and we tie that into the energy stocks for the day, and let's actually head on back out to the daily charts. So some of the energy stocks that we're looking at today, we're looking at COP, which again, you can see they're up a little bit this morning. COP is right at a breakout level. So we're looking at COP over 124. We're looking at MPC, again, consolidating for a few days while the market's going down. So we're looking for that one to take off. We're looking at Schlumberger, and we're looking at Exxon and Chevron. Exxon is actually breaking out. Chevron's still a little bit in this little bit longer term trading rate. So Chevron needs to get above 165. Now, the one thing that's super interesting right now is that a lot of the stocks that we're looking to buy right now is stocks that are showing relative strength to the market. So one of the easiest scans, again, if you're working too many hours and you don't have a lot of time, the biggest thing you need to say to yourself is in the time frame that I watch the market. So again, if you have a full-time job, you're running a business, generally speaking, what you'll be looking at is the weekly charts and higher. So if we tap that in and we say, okay, the market was down last week, but I buy stocks. You have to then say which stocks meet the criteria of relative strength while the market is going down. It's one of the fastest scans you can run. And we can actually take a look at that pretty quickly here. If we go back over to the map and take a look at the last 5 days, you can see some pockets of opportunity of where there was buying pressure when the big picture of the market was to the downside. So you see, we have a couple of other stocks that are large cap tech stocks. Actually, we got a question here about Amazon, Google, and Tesla. So let's actually take a quick look at those guys, and then I'm going to answer Eduardo's question. So we have Amazon right now. Again, what is Amazon doing? If we go out to the weekly charts, just to really bring this home, you can see Amazon right now, $100 is the big level. If it breaks 180 is the next level that we're looking for. Now, this is the same challenge that we have in Tesla right now, where Tesla is sitting right at a major support level. If Tesla breaks here, then we're looking at 180. So both of them have big levels to the downside. So what are we fighting here now in Tesla, Amazon? We'll take a look at Meta in a second. Both of those stocks, if not all of those stocks, are short sales right now, where the bearish order flow is to the downside. The only reason to be looking to buy those stocks right now as a short-term trader is if it starts to hold the bid and we start to see higher highs and higher lows, especially on the hourly charts. The better trade right now in Tesla, Amazon, Meta, Google is bearish right now. But here's the thing. Remember, there's three parts of the trade. The first part is order flow. Is it obvious? Well, yeah, there's a lot of selling pressure in all those stocks right now. It's definitely obvious. Has the tape changed, or is it still valid? So in other words, is that order flow still valid? In this case, yes, they're all still valid to the downside. And again, just to give you a quick visual of what we're talking about here in Tesla, Amazon, still to the downside, Google, still to the downside, and Meta, still to the downside. Meta especially, and we actually mapped this out. The next support level in Meta is all the way down around 115. So the next question, and the final question, and the one that most people get wrong, is now a time to get involved? So again, we're talking about timing your entries. Now, timing your entries, as we said before, it doesn't have to be all in on the first piece. But what we're looking at right now is a lot of these stocks, these large cap tech stocks that have this much what they normally do for profit potential, they've kind of worked into that. And Tesla, probably the biggest example of that, where Tesla is sitting at a pretty big support level right now. So Tesla stock, you found support here, here, and basically on Friday. So right around this $208 level. And Tesla now has 4 weeks of selling in the stock into this major support level prior to the last earnings report, which Tesla has earnings this week again. So as of right now, Tesla is not a great sell short unless it can close below that 208 level. So I want to be clear about the price action. So again, this is where trading becomes pretty easy and quite frankly becomes fun because you're running a business. Okay, Tesla needs to close below 208. If it does, then I plan to short sell it. If it does not, then I leave it alone. You have to make your trading that simple, but definite. So I want to touch on a question here that Eduardo brought up, okay? Preserving capital, but what about short selling? They have nothing to do with each other. This is a good question. I want to actually answer this question, okay? Preserving precious capital means that you are reading the market conditions, and that's determining what your initial position size is and what a realistic initial profit target is. So it doesn't matter if it's a bullish market or a bearish market. Preserving precious capital means that you are recognizing the market conditions, and in those conditions, the market is less obvious. That has nothing to do with buying or selling, buying or short selling. Buying or short selling, when it's obvious and there's room to go, you would not so much be focused on preserving precious capital as much as the likelihood of your profit target being hit. So Eduardo, make sure you have that sequence down properly. Preserving capital is dictated by the market conditions. Market conditions will dictate what your initial position size is. So the more obvious things are, let's say like 2021 in the stock market, where we're basically straight up almost every day, 54 new all-time highs last year, the side of the market was obvious and we were more focused on profit potential. In the current market condition, we're preserving precious capital and looking for smaller pockets of opportunity because the market's been a little bit tougher. So the way that I teach it all the time and the way for you to think about it is, are you in open road or are you in stop and go traffic? Open road, you could step on the gas. Stop and go traffic, you're preserving capital and you're staying safe in your car. And that's a really big part of trading. So today, looking at financial stocks to catch a little bit more of a bid, assuming Bank of America holds the bid right now. We're looking for energy stocks to break out, and we're looking for large cap tech stocks to hold that support level and then look for the next move to the downside. Remember, we talked about in Meta Platforms, the next move is about $10 lower than it is right now. So there's a lot of stuff on both sides of the market. So if I can give you a little bit more, there's two stocks that I am looking to short sell today that are lining up pretty good. One of those is CarMax. And again, if we zoom out here, you can see CarMax at or near support level. Then we're looking at 40 as the next level to the downside if you understand short selling. On the other side of the market, something that is pretty interesting that has now got, again, the big picture is still down, but we made a higher low. Look at the volume over here. Remember, we're talking about the volume expansion. So we're taking a look at RCL. Now we stopped going down. This did not make a new low. So that's interesting. Not only did we not make a new low, look at the expansion in volume. So again, if we go back to what we're talking about over here, what's actually happening here? Buying, ending a downtrend, beginning to build a position, and volume gets a little bit heavier. And that's actually what we're seeing over here in RCL. So RCL has the potential to be reversing to the upside right now. We got to keep an eye on that as this week unfolds as well. All right. Covered a lot of stuff today. If this is all new to you, make sure you watch that replay again. If we did a good job today, do me a favor, hit that thumbs up button and make sure you subscribe. All right. I will speak to you soon. Have an awesome day. Remember, tape readers are winning this game right now. Trend traders are having a little bit more difficulty. So if you're using moving averages right now, you are probably finding the market to be very frustrating because of how fast it's moving in both directions. Learn how to read the tape and you'll get your sanity back. All right. Have an awesome day, everybody. I will speak to you soon. Thanks so much for joining me. I really appreciate it.